So I do think that, as you heard from Dr. Fauci, there's a lot of uncertainty here, but the Omicron outbreak does introduce more upside risks to the broad dollar for a few reasons. First, the dollar is a kind of barometer for the global economy, so weakness in the global economy tends to support the dollar. Second, the U.S. economy seems to be less virus sensitive than economies in Europe and especially Asia. And then third, alongside of all this, the Federal Reserve is moving towards tightening. We think that they'll do a faster tapering, earlier rate hikes than we previously had thought. All of those things are supporting the dollar. We think probably more upside risk over the near term.
Still, Zach, people are trying to come to grips with, the full extent of this virus. It will take about 1 to 2 weeks. A lot of things could change during that time. If we actually get a more severe assessment of this particular virus, could the Fed change its tone when it comes to tapering?
Possibly, although I would be hesitant to take that too far. We would really need to see significant downside effects on the U.S. economy specifically, and a feeling that inflation could be brought under control as well. These outbreaks have mixed effects. On the one hand, they weaken demand in the economy, but they also weaken supply, which can boost inflation because of the disruption to supply chains, shortages, and the like. The Fed so far has been willing to look through some of these most recent waves, acknowledging that they're having smaller and smaller effects on the economy each time they pass, and they're becoming increasingly concerned about upside risk to inflation. So I think it would take a pretty meaningful hit to the U.S. economy specifically to slow down the Fed. They seem like they are heading towards policy normalization. I think that remains the case even with this news in recent days.
What does that mean for rate hikes, though? Tapering is one thing, but when you look further down the road, in terms of rate hikes, what are you expecting? Have you changed your outlook, or are they pretty much the same?
We have 3 rate hikes next year. That is up from 2 previously. So we do think that as soon as they get done with the tapering process or shortly thereafter, that rate hikes will begin at the June FOMC meeting. It's going to depend, of course, on the inflation outlook. At the moment, it looks like inflation will be relatively high next year. And so our central case forecast is that the Fed won't really have the luxury of waiting. Basically, as soon as they wrap up the tapering, they're going to get on with rate hikes. But it's important to stress that the inflation outlook is very uncertain. It could be higher or lower than we anticipated. And we could see more Fed rate hikes than the 3 we're writing down, or conceivably even an on-hold Fed if inflation comes down more than expected. So, there's not been more inflation uncertainty than we have today in a long time. I think we need to acknowledge that. We think a best guess is 3 rate hikes next year. But, there's uncertainty around that and a certainty around the path of the dollar as a result.